All right, folks, welcome. Happy Thursday. This is February the 7th. I had to check my calendar on that. I'm in crypto hibernation. That's what bears do, they hibernate. So, I find this bear market a good opportunity to pump some iron, lift weights, get healthy again. So,
So
looking
you
at
get you
Bitcoin.
get fat during the bull markets and lose it when things are lean.
That's right. That's right. Fat wallet, fat belly during bull markets and during bear markets. And the ramen supplies dwindle. It's time for intermittent fasting,
Yeah, there you go.
down to 2 meals a day. All right. So, anyways, yeah, I'm doing it for health reasons, folks. Just health reasons. All right. So, looking at Bitcoin, kind of just see it's a still a bit of a flat line. Not really much in the ways of price action. Just seems like it's slowly squeezing. It's like what Chris was saying the other day, could very much be a coin toss, 50-50. Obviously, if it breaks down, it'll come down to this zone. And if not, you never know. You could end up with one of those Bitcoin moments where it just spikes up $1,000 candle or whatnot, like it likes to do sometimes.
Yeah. Or Rock, even see like before the 6K break, that little spike like a couple of weeks before you got the breakdown, how there was that short squeeze. There's
Oh
like
yeah,
an
let me
intraday spike, like you could get stuff like that
right
too.
here.
Exactly. Yeah. And
Yeah.
that's why, like, whenever I say, guys, like in a watch list or something, um that I'm looking for a reactionary play instead of anticipatory. That's what I mean, is like I don't try to like place orders and get into a position prior to the move. I want to wait for confirmation of the move and then be like in as soon after that as I can. That's just how I like to play certain things. But Rock, I don't know if you have any other opinions.
Yes, absolutely. And here's the thing with this market, like pretty much from this point forward, this is what I call the slow grind phase, right? Where volatility dries up. You've got all this like really nice volatility on the initial crashes. Like I actually really like the initial crash, like the parabola and the initial crash of any boom bust pattern. I find it, obviously like this is where there's the most volatility, but I find it to be also the most predictable to trade because it's has so much volatility and the moves are so big. But then as it dries up, and you see these moves are getting smaller and smaller, and then it just kind of goes flat and then breaks down, and instead of like a nice epic bounce play to retest, it just kind of continues to grind sideways, and maybe it makes another leg down. So, typically in my own rule set, I generally for coins or whatnot, I generally avoid trading the slow grinds, and you kind of even broke my own rules a bit by buying some stuff in through here on the slow grind. But it's a bit of a catch-22 in crypto, because if you keep money on exchange, you end up in a quadriga situation. If you keep dry powder on the exchange, if you pull out of the exchange, if you need to take a trade, you have to wait multiple days or weeks to get money from a bank to an exchange. I haven't seen any for myself, I haven't seen any quick ways. Or you end up holding, people are all preaching now, oh, hold your own private keys on Twitter. It's like, what, did everyone just lose 90% of their portfolio value? Did nobody hedge? I don't think anybody really did, really. But anyways, I digress a little bit. So a little bit of flat choppiness on Bitcoin. Not a heck of a lot happening in price action on altcoins, except for the main hype of the week. There's always something that's kind of hypey. It's the whole BitTorrent thing, the BTT. So this was launched. We don't know what the market cap is for some reason, or at least they're not stating it on CoinMarketCap. Although technically it should just be supply times price, but it depends on how much supply is locked up vesting versus how much supply is in the free market that's available. So looking at this, it's kind of like, looks like a Binance pump special. You know how Binance tends to have this pattern where anytime it lists a new market, the market tends to rally. And I think that was feeding into a cycle where they could charge high fees and everyone would want their coins listed on Binance because it always rally. We don't know if they're moving the markets themselves or what, but this was an ICO that was done on Binance. Basically, you know, Tron bought BitTorrent and tokenized it and did an ICO. Now, if you ask me on a fundamental level, I think that's kind of unnecessary. BitTorrent has been working for decades without a token. I'm not sure how much value that's going to add. So it would be interesting to see. I think it fundamentally could just be hot air. But we also know fundamentally, like a lot of these crypto movements that we've seen, even in 2017, like a lot of those are hot air anyways. So just because it's a hot air on a fundamental note doesn't necessarily mean that it can't continue on a leg up. This would, in my opinion, be a first leg up if it does continue. I think it's in Binance's best interest to have it push up just because it's good for their marketing, their ICO platform. If I were, I'm not in a trade right now on this, and I don't think I will. But if I were actively trading this, what I would do, just to simplify things, because there's a little bit of a dip here, kind of dropped, dropped about 32% from that high, about 24 right now. So if it were me and I bought a dip, I'd probably do partial size and just cut out if it breached like this line of support. That snap below, I'd risk 12% on something like that. And if it did continue, then possibility that it, pops up into this region here or even this region, if that were the case. So if, let's say it went up here, I could be like, risk 12, 13% to make 80%. Even if it retested up here, still 32%. So that's one way of doing it. Another way of doing it would be just waiting for a breakout above this resistance or like a throwback after the breakout point, or a combination approach, maybe a little here, add a little on the breakout, and if one scales in partially and it flops and cuts out, then either maybe a hard stop 13%, and then
yeah, Rock, that's typically how I'll do it on like this, because see how like this is the first move, right? So you got like the first leg up and then you got the retracement.
Yeah.
Basically the two possibilities here, and there's zero way to know what the actual outcome is going to be.
Yeah.
Unless you work for Binance and you know that like, oh no, we have X budget to continue to make this thing move. What I typically do on something like this where it's unproven or unknown that you're going to go for a new all-time high is I'll typically scale in like anywhere from a quarter to a third with set risk, like you said.
Yeah.
And then like if you do get a stop out, it's you're getting stopped not only a small percentage size because your risk to reward or your risk on that side is so low, but if it does go against you, the actual value of the loss is only a quarter or a third of a full size trade.
Yeah.
So that gives you kind of the ability to have some skin in the game without a lot of risk. And then if you do see a breakout, then you can scale in the other, 2/3 or 3/4, and you'll still have a little bit of a better average price, hopefully below the resistance high. So it's just another kind of way to think about risk is through position sizing. Whereas like if it's an established trend and you know that you're at like market structure support, you know, there's times to have a lot more confidence to go in heavier earlier. But something like this, where it's a real thin coin, it's kind of up on hype, you don't really know, okay, how crazy is this thing going to go? I tend to be like a lot more conservative in scenarios like this.
Yeah, absolutely, absolutely. And one interesting thing about this market is that, you know, it made a move. So if it makes a secondary or third move, it shows that there's a possibility that this market is moving, whereas other ones might be a little bit more flat. If one were to try to buy it a bit lower, it's a lot more difficult to read. As far as like, the only reason I would have bought something like this if it was doing this was because of, you know, Binance's involvement with it and just kind of assessing market sentiment wise, probabilities of coin projects that stuff like Binance is involved with, or Tron for that matter. You know, Tron had made stupid, ridiculous gains in 2017 as a higher market cap. One could also start scaling in on the break of this, on this volume spike. You see this volume spike right here, and it holds up. One could start scaling in right there as well. The volume on this coin is actually quite interesting. Some of this volume might be hot air because Upbit, I think, got nabbed for some fake volume wash trading. Whereas Binance, there might, you know, the volume on Binance might be real. I say might loosely. I mean, you know, CZ, one thing to take into account is CZ also used to be the CTO of OKCoin, and OKCoin was notorious for wash trading. So there's no guarantees that their volume's real either. But regardless of that, if I were to trade this and I put some Bitcoin in and can manage to pull more Bitcoin out, then at the end of the day, it wouldn't really matter to me, any of that, as long as I get more Bitcoin out of the process, you know. But a lot of this could be a fake volume. So this is probably the only real interesting thing that I saw this week. BAT apparently had a partnership, some kind of partnership with Coinbase. So I think that popped up a little bit, popped off. Nice little quick spike. Wonder what the volume on BAT is. So obviously, like any US exchanges that are more regulated will have much more real volume stats. Like you're probably not going to see like Kraken and Coinbase and stuff doing fake wash trades, because they would likely get fined. Whereas like, you know, more obscure exchanges like Binance that are in gray jurisdictions outside of the regulatory reach of the US can probably engage in that, maybe get away with it. They do have a long arm though. So a lot of this is on Binance again. I mean, and don't get me wrong, I like Binance. I don't really trade on there much. I just have an account that I occasionally buy when I want to buy something on there as an investment. I'm not doing a ton of actual trading right now. Price action's being fairly choppy, just like spiking up and down. I wonder if there's a good USD price. All right, see, just trading the BTC charts is deceptive, right? So you see this big spike. Oh, looks like a big deal. Made a big move. You're like, all right, what does that translate to into the real world dollars? And it's still very much, you know, it actually popped a new USD low before this massive spike. So if people are doing backflips on Twitter over this, then you have to zoom out and look at it in perspective as well. So if this did take off and have legs, then, you know, it's still fairly early and low. It just spiked, but I think that from what I've seen, any hype around Coinbase seems to be like a one-off spike on the charts. We had, was it right, where was it when BAT got listed on Coinbase? Was it up here, I think? Just like spiked up and dumped. Would you buy BAT as a long-term investment? I mean, if I had to choose a token that I thought had like more utility than other tokens, BAT would certainly be on the list from a fundamental standpoint. I mean, the token's functioning right now. It's linked to the Brave browser. Would it be deemed as a security? I don't know. It really seems like it has a lot of utility, but I'm not, for what they're doing, I'm not a lawyer on that one. So I'd say it probably is a better token bet than a lot of the other tokens that don't even have a working product. So there's a lot of tokens out there that are still very much hot air. There's only a few tokens that actually have working products, BAT being one of them. But would I bet the house on it? Probably not. I still, investment wise, I still kind of lean on my thesis of investing heaviest in actual networks because they have a higher degree of decentralization versus a token linked to a niche browser that's backed by a company. If something happened to that company, would the token still be around? Would the token still have value? Would the browser still continue? I believe it's open source, so anything that's open source can be continued fundamentally, but we've seen a lot of projects just kind of hit the dust just because the companies folded or whatnot. So,
Yeah. So Rocky, to your point, like with something like this is actually a really interesting scenario because like you said, they have a real product and they're actively, doing things to try to make their product catch on, right? Partnering with Coinbase and, trying to, get the word out about the Brave browser, which by the way, let me kind of kick this back to you guys. Is anybody actively using the Brave browser? And if so, what do you think about it? Like I've played around with it a little bit. And I get kind of what they're doing with the BAT tokens. And I do think that the internet is going to change, like, with like paywall articles and things like that and automatic payments, microtransactions. Like, I do think that that's going to happen. And it seems like these guys are on the forefront of that and they could be one of, if not the winner. But what I think, kind of how I'm thinking about this as an investor is, okay, let me wait a little bit, see what kind of traction they get, let them put out some numbers saying, hey guys, here's our user growth stats, here's how many different major media outlets or bloggers or whatever are using this product. And then look at that and make a decision like, oh, okay, this thing's actually got some legs and it looks like it's growing and it has even more growth potential. That's kind of what I'd wait for, especially during a bear market where it just seems like there's a lot of selling pressure on crypto prices as a whole, right? It's like when all tides are rising, I tend to be more aggressive. When there's a lot of selling pressure across the board, I pull back my risk and my trades and my investments from the full spectrum, right? From all the way from like angel and early stage, all the way through, multi-year positions and long-term investments. Like the whole portfolio just becomes way, way, way more conservative. So, yeah. So, even, surveying like our small little demographic here, like doesn't look like anybody's saying like, oh yeah, I've thrown away Chrome or Firefox and like this is my only browser and here's why it's so good. Who knows? Maybe 6 months or a year from now that could be different.
Yeah, it seemed to work better on my phone. On Ubuntu Linux, it was really glitchy for me, so I stopped using it on the Linux computer. But
yeah, Nicole says using it on my phone daily works great. Has blocked thousands of ads.
yeah, it seems to be working all right on the phone and maybe other operating systems. And it's an interesting concept, and it's good because not only can it block ads, but it can block other harmful scripts and stuff like that on websites. Someone could possibly put malware on their websites or whatnot.
Oh yeah.
So it could be an additional, security layer. Like I used to have extensions that I would put on my other browsers, like NoScript and stuff like that, that would just block every single script on a website, and then I'd have to manually unblock them, which, was a bit of a pain because you'd have to figure out what each one of them did. So, but definitely, are you still trading on Linux? Or I'm trading on Linux, and I just use Windows for, screen sharing and this kind of stuff. So I've got different, and then I've got a Mac for travel. So I've got all the operating systems. So, all
Dude
right.
says lots of coins on things oversold like XLM, NEM, with very low RSIs and bullish divergence. Would that be an indicator of possible pump? I'm talking about swing trading, not long term. I have an opinion about that, but Rocky, do you?
I think that we're due for counterforce, and the markets, in my opinion, I don't think it's a matter of if the markets will pump, just a matter of when.
Mm-hmm.
But it could, we could chop around and go sideways or drop lower for like another year before we even see that. And just as an example of that, we can dust off the look at like something like Litecoin back in the day. Just had really, like, USD wise, it just had a very long period of stagnation after its bearish decline. So it had this slow grind, which obviously, the initial shakeout in 2014 would have been good trading. Then it had this slow grind that just continuously bled out. So no matter where you bought, you'd be losing money. Came all the way down to 80 cents. And I would say probably from here all the way to, we're talking years, like 3 years pretty much.
Mm-hmm.
This 3 years of pure crap, except for this little spike here, which was actually really fun to trade, before it actually took off. So I think that the markets, in my opinion, obviously nothing's guaranteed, but I do think that we're eventually getting this pendulum. It will swing the other way, and when we're in these long, prolonged bearish scenarios, it's easy to forget the good times and just how fast and how aggressive these markets can gain when it's their turn. But it's a patience game, and it literally could take years. And I remember even with Litecoin, like I've watched this for years before it actually took off. So that's my opinion. So it'll be right around the corner. The ultimate question is, are we closer to this area over here, or are we like somewhere down here? Right?
Yeah, and to your point, so David, directly to your question too about like, looking at RSI and divergence and stuff like that as a possible buy indication. With altcoins specifically in bear markets, to me, divergence on any oscillator like MACD, RSI, any one of those indicators, divergence alone is a very noisy indicator and a very noisy TA tool to try to use. So for me, instead of trying to nail the exact bottom and guess where the pivot point's going to be and try to swing off of that, what I like to do and what I've found is much, much, much more higher probability, and just from a timing perspective, a lot more accurate too, is wait for the first pop and the first pullback. And then I like to trade the secondary breakout, or after the market actually holds a higher low and actually shows signs of strength. Because like Rocky was saying, like you can show bullish divergence in a bear market, but that can get run over for months or years, right? So if you're patient and you wait for that confirmation, sure, you're not going to buy the exact bottom, but if it's a true multi-week to multi-year bull market, like, you don't have to nail the bottom. In fact, you'll probably do better trying not to pick every divergence and just wait for that confirmation, and then oh, now's the time. Like, it's very simple, but a lot of people like to overcomplicate it with these indicators that, in my opinion, more times than not, do more harm than good.
Yeah, for sure. Here's an example of quote unquote bullish divergence on Litecoin that lasted half a year, right? And it did kind of signal the bottom, but the price went flat for another half a year before it actually popped and did anything. So it wasn't like it showed, maybe it was like a spice in a cake, one ingredient that showed a possibility of getting closer to the bottom, but it didn't forecast any immediate action to be taken unless one just simply perhaps bought a little and just held it for a few years.
Yeah. Right. Yeah. And you, I mean, the oscillating indicators are so noisy on a longer time frame. Like, we used to do them when we were day trading futures, and it could be pretty accurate intraday when you hit like really nice divergence at a strong market structure area. But when you're trying to look at this size of time frame, I don't know, divergence to me is just not that reliable.
And this is exactly, and this was like the one scenario where you had it, and then for the most part it was just pretty much just tracking the movements. The most dangerous thing to do is look at divergence and think that it has to reverse because there is divergence, and that's what a lot of like technical analysis books will teach you. And if you do that, it's a very, very painful game. And I think more important than any indicator is really the fundamental side of this, right? Fundamental / market sentiment, which is why we use a combination of all of them, right? It's like when you have the market sentiment and the fundamentals that line up, then the technicals oftentimes work better, So I like to look for like a combination of all of those going, we have confirmation in the price action of a trend. We have market sentiment in alignment. We have, the fundamentals in alignment. Like, once you have all three of those, the market really does the heavy lifting for you. Yeah, absolutely. And here's a possible, false signal right there. It's producing higher lows, but then the entirety of these higher lows, it produced a lower low, but it still continued going up. So it wasn't anywhere close to being over.
Yeah. In fact, when you have an established trend, some of the best plays are a break of divergence. It's like where, you have people that are stepping in early trying to short the highs. When they cover, that's when you get the second and the third and the fourth breakout. And then you go, holy crap, how did this thing move 500 or 1,000%, right? It's because people that are early to the game shorting the trend or trying to go counter trend, they just get destroyed, and that becomes even more bullish buying pressure when they cover their short positions.
Yeah, absolutely. So we're kind of, just since we're on the Litecoin chart, we're kind of almost a full retrace.
Yep.
Almost a full retrace from most of the 2017 gains. And that's the case for a lot of markets, which
Ethereum looks very similar, and we talked about that 2 weeks ago, kind of the outcome for that.
And like historically what'll end up happening, like let's say this was the bottom, or let's say it went a little bit lower, I think we're definitely whether it's the bottom or not, it's certainly closer to it. In my opinion, historically what would happen is like maybe you just get a lot of sideways for a very long time until it decides to break out of the range and then do its thing again.
Once we have confirmation of accumulation, but then we also need to look at the fundamentals, unless it's a pure market sentiment hype play, right? Like unless there's another just like all tides are rising, because I actually didn't trade Litecoin too aggressively ever, just because fundamentally I was like I get the story behind it, but I mean, look, even Satoshi Light sold all his stuff, right? Like, so it's like this next round, whenever the next bull cycle does kick in, I only want to trade stuff that has very, very strong fundamentals or a network effect behind it of users actually using the products. Like, I don't think we'll ever see a boom like 2017. I think we're going to see other bull markets. They're just going to look and feel differently. And I know on this next run, whenever it happens, if it's tomorrow or whenever, I'm going to be much, much more selective.
Yeah, for sure. One interesting thing to note in the last cycle was, Litecoin had broken below this line, and then when it popped up, it was on this. There's this Chinese Ponzi scheme that I think managed to acquire about a quarter of all Litecoin in existence, right? And this was like verified, right? And they dumped it. They basically created this big little parabolic pump and dump right here. And at the time, this doesn't look like much, but at the time, this was the most exciting thing in 2015.
That was like the only exciting thing in 2015.
Yeah, this is like, oh, wow, look at this market. It just popped, 400, 500% or whatever. But what's interesting is when it crashed, it actually held this line of support above that prior resistance point, which kind of just went sideways for a long time. But that was, I guess, perhaps the first sign that of established accumulation, and then just rose with the tides. But as far as like investment wise, Litecoin's definitely not my first choice. I put it under the pumped up sloppy table scraps category. Like, as an investor, I want to be an early adopter and as an early adopter, I want to try to get in at the lowest possible prices for any particular crypto project. And so for me, having seen Litecoin at 80, 90 cents, I don't really drool at the opportunity of buying it at $25, even though it's quote unquote cheap. I'm not even like really drooling at the opportunity of investing in Bitcoin at $3,000. And even though that's cheap relative to the recent highs, for me, in my mind, it's still a bit expensive. So I just supplied my energy and went in a lot heavier on newer projects that have higher survivability than perhaps some other newer projects. But I think that once Bitcoin takes off on its next cycle, perhaps 2021, whatever survives, I think it's going to be a case of the all ships rise with the tide again. And there'll probably be a lot of projects that will die over the next 2 or 3 years before that time. So one has to be selective. And there's all kinds of things that can contribute to a death of a project, such as lack of funding, lack of developer interest, which usually goes hand in hand with funding, lack of innovation, or lack of an ecosystem or community support. Because like at the end of the day, the only thing that gives any of this stuff value is the community. And the community is, entrepreneurs, miners, developers, marketers, shit posters, you name it, traders, the whole works, right? And so that's the only thing that gives any of this value at the end of the day, is how many people are using it. Ethereum went absolutely nuts because, it's for all the altcoins out there, it's the most developed altcoin out there. Aside from Bitcoin, it's got the biggest development team, right? And not even just amongst the core developers, but all the periphery developers building businesses and applications. And even if a lot of those applications are still hot air or experimental, it still shows activity and interest. And oftentimes we end up seeing market value based on activity. And then sometimes you just get pure hot air, like just pure shitcoin pumps on absolute garbage. That'll happen too. So can't just base it on fundamentals alone, because that does tend to happen a lot in crypto as well. Are there any, before we dive into this week's news and stuff, how about we look at 3 tickers, if y'all want to drop 3 tickers in the chat?
While you're doing that, I'll just let you guys know I just heard back from Open Finance, and they said no U.S. traders for now.
Oh yeah.
Yeah, they're like, oh yeah, we because it still says they haven't verified my accreditation, and they're like, oh yeah, you're good. It's just we're not going to take U.S. people. It's like, oh, thanks for letting me know.
Damn. So ZRX, start the USD chart.
Go USA. Yeah.
New low. Actually, I think pull out the most data. Anyways, new low as far as the secondary markets, still well above the ICO price. You know, I still kind of slot this in the slow grind category. One could certainly, investment or trade wise, one can certainly take a punt and buy some lows, but just full well know that it's when it's slow and choppy like this, it's more challenging to, you know, find an exact bottom. So, you know, one could either just buy some low, or one could just wait for confirmation and actually see if wait for the markets to move. And so there's, you know, there's pros and cons to both approach. The benefit to waiting for some confirmation is, although you might end up buying in a slightly higher price, you'll be buying into a market that's actually moving in a favorable, could be actually moving in a direction that would be favorable to your position, versus right now it's still clearly moving in a downward trajectory. So, you know, one could, and it doesn't look like much, one could buy here and say, okay, that's pretty cheap, and that doesn't look like a big deal. But then if you measure that percentage wise, it's still, oh, that's a drop 30% from that point, right? So that's just one thing to keep in mind in relation to any of these. Obviously, I do buy things that are in the gutter, but you know, you got to put in capital that you're willing to risk, so you can afford to lose, and you know, have a plan set out. Either set a stop if you're going for a specific trade, or you know, position size and average if you're going for more of a longer term investment. So ZRX doesn't look terribly eventful, but you know, one thing that I've learned in crypto is the markets look dead until they're not. Like, yep. They look like absolute dog shit until they're not, and then when they're not, they usually make nice moves. But again, we don't know when that is. It's kind of like the markets are in hibernation right now, right? Bears going to hibernation,
and that's why, like, I don't try to guess. I just wait for, like, kind of like an alarm clock. Like, I'm like, all right, well, the markets are sleepy. Wake me up whenever there's confirmation, because like, you don't have to be first in. You can be second. You don't want to be 7th, 8th, or 9th. But if you're second or third, that's, you know, that move from second to 9th is the profit.
Yeah, absolutely. Absolutely. So this also broke support on BTC chart. So not a heck of a lot happening here in this regards. You know, fundamentals are the same. That hasn't changed. So we've got Poly. So look at Polymath. See if there's any life breathed into this. This did have a little bit of a pop, and then it faded. You can kind of see it bounced a little bit off of that line. Not a heck of a lot happening here. From here to here, jumped up about 157%, and then from that point down to here, it dropped an additional 54%. So this is still kind of like in a slow bleed, possible turning into accumulation if I can see a USD chart, which I don't think there are any. So it's kind of deceptive. So it would make, I bet you if you were to look at this on a USD chart though, it'll probably be at a new all-time low. Let me just look at here and see what the volume says. Volume's not terrible, 9 million. Yeah, definitely new all-time low, right? So this is just, you know, from here, I would say like from here down is just like a slow bleed with very weak bounces, right? So that's Poly. And then NPXS, another low Satoshi coin. NPXS. This seemed like it had some correlation to Holochain. Was moving up at the same time, but not as drastic. Just a small punt and hit resistance in through prior support area on the BTC chart. Low Satoshi coin. I treat these kind of low Satoshi coins similar as I would a Doge coin. You know, if I were to buy some, I would just buy some and hold it, and then, you know, maybe sell at 100 plus Satoshis, something like that. This hasn't really had its moment of sunshine. You can see it was listed on Binance, had your typical sell-off on the listing, lots of flat, and it'll probably have its moment of sunshine one day where it'll have a big spike similar to like maybe a Dogecoin-esque type low Satoshi market, but nothing terribly eventful right now. Slight volume increase here, but nothing eventful. I'd need to see it at least pop above this line and hold up. And also one thing that you'll notice that when you do hit a reversal and it does break out of the range, that you'll start to see the candle sizes on the 1D get larger and larger. Usually they go up in multiple waves, and each wave that it makes up, the 1D candles will get bigger and bigger. So that's typically how you know when a crypto market is taking off and hitting a reversal. And generally when the 1D candles gets, usually near the end, you'll get a 1D candle that dwarfs the entire size of the entire run. And that's usually when it's time to sell all your bags, because that's usually a sign of it going parabolic and hitting a reversal. I'll look at one last one, and then we'll jump into KMD, and then we'll jump into some of the news events for the week. Same thing, KMD, just a lot of sideways chop. You know, on the BTC chart, it looks like one could look at it and say, okay, well, this certainly looks like an accumulation pattern. And, you know, some people like to only trade BTC charts, but a lot of those people, you know, lose a lot of money only doing that. I like to look at the USD charts as well, and I bet you on the USD chart it probably broke a new low. So anyways, TradingView probably has the USD equivalency of a lot of those. So off into news events of the week. So obviously the biggest news event.
Seen any ghosts, Rocky?
Any ghosts?
Any ghosts? Any ghosts walking around India?
Oh yeah. Jerry Cotton, he's you know, he showed up at my door trying to sign me up for some kind of Ponzi scheme or something. I asked him where my money went. Anyways, so the whole thing. So anyways, they went to court on the 5th, and there's another hearing on the 15th. So if we were to believe the official story, so I'll tell you the official story, and then I'll tell you the conspiracies floating around for those who aren't in the loop. So the official story is, you know, Cotton died in India from a Crohn's complication, and he, you know, he had the foresight to write a will 2 weeks before he died and stuff, and get married a month before he died, but didn't have the foresight to have other members have access to the cold storage wallet. So apparently they're unable to access the mass amounts of crypto they have in cold storage. There's about 20, I think it was 25 million that was frozen, that was causing withdrawal issues all year. That's being unfrozen. It's currently being held by BillerFi or whatever that third-party payment processor company is. Right now, as it looks, if they don't find the private keys to those cold storage wallets, then it looks like if people do get their money back, I think it's only going to be 10 or 15 cents on the dollar, based on what they actually have in cash from those frozen accounts. You never know, after lawyer and accounting fees, they're definitely going to get their pound of flesh. So whatever's left over after that, of course, because they probably will rack up some multi-million-dollar bills in this whole process. So anyways, they basically went for creditor protection, which is like one step above bankruptcy. They said they needed a month to buy time so that they can try to find the money. The best case scenario would be, oh, we found paper wallet or 24 words or whatever in a safety deposit box, and boom, we've got access to $100 million plus worth of cold storage coins. That would be the best case scenario. We'll open up the exchange and people can do their withdrawals and so on and so forth. And we all sing Kumbaya and live happily ever after. So that's the best case scenario. Worst case scenario is this turns into like a Mt. Gox trustee crap where it literally drags on for years. I think right now, just looking at Mt. Gox, they actually have fiat value because of the increase in the price of Bitcoin that happened last year. They have fiat value to reimburse everybody right down to the penny for all the fiat that they had in the exchange, not the Bitcoin equivalent, but the fiat equivalent that they had in the exchange. But people have, like, a lot of people still haven't gotten any money from it. So it's taken years. So these processes can be very, very slow. And I'm personally, I lean towards being more skeptical and assuming that I've lost my money. So that way, if I didn't lose my money, I get it back, it'll be a pleasant surprise versus being disappointed. So I'm also a bit cynical when it comes to crypto stuff like this. Obviously, there were warning signs on the wall all year with the withdrawal issues. But because they were having legitimate banking issues that was in court, and I looked at the court documents and stuff, and because I never had issues with them since 2015, like I've been relying on Quadriga since 2015 to cash out money because as many of you know, I've been living off Bitcoin for years. It was my primary source of income for years. And so I kind of relied on them, and they've always been reliable up until they weren't. So even an exchange that you know and trust and you think is reliable, they're reliable until they're not. And then when they're not, they're really not, right? So obviously this puts a little bit of a damper on my plans. I did have some fiat reserves that were just, in hindsight's always 2020, all the coulda, shoulda, wouldas. But I did have fiat sitting on that exchange for pretty much the entirety of 2018. I had one big trade in April, and then I cashed out on a bounce play and just held cash in there. And I had cash on the other exchanges, but I was buying crypto and siphoning money off the exchanges. And I just, ironically, I kind of chose the wrong exchange for that. I should have been siphoning off the money on Quadriga. But again, hindsight's 2020. Obviously, one should never put more money on any exchange that they could afford to lose. If you still take a big hit, it sucks. Whether you can afford to lose it or not, it still sucks, right? It's still a hit nonetheless. So that kind of made me readjust my risk tolerance a little bit. So I pulled off my other money off the other exchanges because I don't want any money sitting on exchanges because I don't want to take another hit. And that's that. So I'm just kind of batten down the hatches. If I do get that money from Quadriga, If the price isn't any lower than it is now, I'll probably just put that into my bank. And if the prices do go lower, then I'll probably just do a much slower withdrawal. Right now, I am testing a fiat withdrawal with Kraken as well. And they have a partnership, not partnership, but they have an account with Credit Union in Nova Scotia. So that might be a good option for Canadians, and that might have to turn into my go-to option if I need to cash out. The conspiracy around Quadriga CX is, many are speculating that there's possibility that Jerry Cotton possibly faked his death in India. He died in an area where it's very popular to fake deaths, and people do it to try to avoid debts and so on and so forth. What needs to happen is we need some forensics to figure out what the cold storage wallets were so that we could watch those to make sure none were withdrawn from those wallets and that none will be withdrawn from those wallets in future. So if it did turn into fake death, then obviously that would be a James Bond type of exit scam. I don't think that would last very long. I think it would be very, very difficult if that were the case. I think it would be extremely difficult for him to get away with that. He also, if he did do that, he also left his wife holding the bag. She's been getting I'm sure she's not having a very good time right now. She's been getting death threats and all kinds of stuff. And I mean, in some ways, I feel for her, right? Because, let's say she had nothing to do with crypto and she married a crypto guy and then he dies and irresponsibly doesn't have a contingency plan. And suddenly it's her mess to try to figure out. And then she's got all these angry Redditors with pitchforks and tiki torches or whatever, sending her death threats. I mean, as much as I hate losing money, I think it's I just think it's kind of low to stoop to that kind of level, right? I mean, I'm not gonna go threatening someone's life or trying to make someone's life miserable over money. I don't care how much money it is, right? But some people will really kind of lose their shit over money. Understandably, emotions run high, right? And some people might have lost less than I lost, but maybe it was a higher percentage of their net worth, which would sting more. Actually, I have a friend who stands to lose less, but it was like 50% of what he had, right? So that would be a fairly big hit for him. And then there are some people who are stand to lose a hell of a lot more. Like apparently the largest account holder on there was $70 million. Now, if you were a billionaire and you had $70 million on there, then okay, perhaps that's a risk one can afford to lose. But if that 70 million was a substantial part of that person's net worth, then that was very careless for them to keep that much money sitting on an exchange. So yeah, there's a possibility that this could be a fake death exit scam. Time will tell. Lots of drama. Obviously, and it's always a catch-22 because with this drama and the big waves it creates in the media, everyone will demand more regulations, and more regulations can sometimes be a good thing if it standardizes things, but it could also be a royal pain, as we see with Chris just waiting to get verified for the accredited investor stuff, right? It can take a while, but it sounds like there's not really even any regulated standardization for that. It almost seems like accreditation is decentralized in a way right now. So anyways, that's another interesting point. And in 2015, we did have a hack. We had the Bitstamp hack, and that led to a big capitulation down to 166. So yeah, we start off 2019 with a couple hacks. There's a Cryptopia hack, and then there's this Quadriga hack, and or hack or whatever. It's not quite a hack, but pretty much the same effect. So, but the market didn't respond to it. Also, these weren't major exchanges that have huge influence over the price of Bitcoin. So, if it were like, let's say, a Binance hack, a BitMEX hack, or a Bitfinex hack, or a Coinbase hack, then we'd probably see a bigger impact in price. But this is more of an obscure Canadian exchange, although $200 million worth of crypto is still nothing to shake a stick at, right? So it actually just shows how much the industry had grown, that a small Canadian exchange is managing that much money. It makes you actually, the bigger exchanges must be managing billions right now in people's money. Binance must be holding billions worth of crypto, Coinbase, billions. So the industry's grown a lot. Speaking of industry growth, Kraken is kind of my new favorite exchange. I like Kraken for a few reasons. One, they did fix all their glitches that they had. They used to have horrible glitches. They fixed that. But particularly, I really like their CEO. I kind of philosophically, we kind of share a lot of the similar perspectives. And he's usually very vocal about specific issues and stuff in crypto, and isn't much of a pushover either. So it's interesting when he tweets stuff. They obviously, Kraken hasn't been hacked before, and apparently they have decent withdrawal for Canadians if you need fiat alternative. But they have futures trading now. They just launched futures trading, so they're actually going to be one of the first crypto exchanges to offer both spot and futures simultaneously. So that should be interesting.
Yep.
Am I looking into the funding round on Kraken? I was really interested in that funding round for Kraken until I lost money on Quadriga. Now I've really been tightening my bootstraps as far as my risk tolerance. So obviously, if you take a big hit like that, then that really changes how much money, spare capital, one could just throw at stuff. So I'm being a lot more conservative now, right?
Yeah, and the valuation they're trying to raise at, in my opinion, is too much right now.
Yeah.
A few years from now, you could look back and go, "Oh, that was a crazy low valuation." But I would much rather try to get some equity a little bit later. That's just my opinion.
No, absolutely. Like, I absolutely love the idea of being a shareholder of a successful crypto exchange, especially like, one that's been around as long as Kraken. I think they were around since 2012 or something like that. Because crypto exchanges are just cash cows, right? When they're working, they're just like insane cash generating machines. I mean, these guys are the ones selling the shovels in the gold rush. They're hands down, the exchanges are making most of the money in the crypto space right now. Bear trend, bull trend, they're racking it in no matter what, right? But the biggest risk for any crypto exchange is, even though they have been successful and even though they've been around since 2012 and they've never been hacked or whatever, all it takes is one screw up. All it takes is one Quadriga CX experience. Founder dies, a hack, for private keys lost, something like that, and then suddenly the exchange isn't even worth the paper it's incorporated on, right? I mean, Quadriga was seemed like a cash flow positive, successful exchange until they weren't, and then now they're, who knows if they could even get anything selling it because the reputation has been so damaged because it's debacle. Just like that, you snap your fingers and $200 million is gone. So that's the biggest risk, obviously, with exchanges. But this is interesting just to see more progress. They are US-based exchange. Another interesting thing is that we're seeing a lot of the legacy stock exchanges really getting into blockchain or Bitcoin. Obviously, a lot of the hype around New York Stock Exchange and NASDAQ They've both been avid supporters of Bitcoin and crypto since like 2015, so they're not even new on the bandwagon. But you're seeing other exchanges like the largest Swiss exchange now is using a blockchain platform. And what I find particularly interesting about this is that we might actually speed up settlement times because traditionally it seems like there's a 3-day waiting time for actual stock settlements. Whereas with blockchain, we might start to see that process being sped up to being near instant, right? And obviously the point of a blockchain is it can keep a live ledger. So that would cut out some of the middlemen. So that's an interesting move in that direction. Obviously, if they can, I would like to see more crypto and Bitcoin ETFs that I can buy through traditional investment accounts. The biggest reason why I personally want to see something like that is because in Canada we have this thing called the tax-free savings account. The max you can contribute to it, I think right now is like 65,000 or something like that. But any money you grow in it, you can pull out tax-free, right? So if I bought into some crypto ETF at the lows, and then 60K 10x's and turns into 600K or higher, I could pull all of that money out tax-free. So that's one of the reasons why I'd like to see some ETFs to have more of those options available in specific tax accounts like that. But the options are very limited. I know there's a mutual fund in Canada that's crypto based, but you have to be an accredited investor. I am an accredited investor, but I haven't gone through all the whatever rigmarole of doing that. Like I said, I'm kind of I've got KYC fatigue because there's been data breaches and there's no guarantee that anyone's going to keep my data secure. So
yeah,
that's that.
Also in the US, there's some it's called self-directed IRAs, so
Okay.
a SEP IRA. And the one of the accounts that I have, they're actually doing crypto custodial stuff now.
Oh, nice.
Yeah, so if any of you guys are in the US and you have or are looking to set up a self-directed IRA and buy crypto through your IRA, there's actually some companies that are offering that now. I haven't personally done it, but I logged in the other day to settle a real estate transaction, and I noticed that they launched that. I was like, oh, that's cool. That wasn't even like huge news in the community.
Yeah, and one of the benefits to that is you only get taxed when you pull the money out of it. So you have the benefit of compounding. So if one didn't need the money right away and you made some nice gains through crypto and one of those, then in 10 years or whatever, that profit could possibly be compounded. It's more money for one to reinvest before getting taxed on it, right?
Yep.
So yeah, that's another reason why I'd like to see that as well.
Yeah, and Rocky, feel free to pull that up too. This is just one example. There's several of these companies out there that do these self-directed IRAs, but this one says you can. Let's see. It says Equity Trust supports the following currencies: Bitcoin, Bcash, Litecoin, Ethereum, ETC, Ripple. So,
nice.
Looks like they've got a minimum trade of 10K.
Interesting.
Yeah. So that's pretty cool. The more of that type of stuff we see, the better.
Now I wonder if so they hold the crypto on people's behalf.
Mm-hmm.
I wonder if they're insured by anybody for that.
That's a good question. I haven't talked to them about that. But yeah, there are several companies that are trying to do this, and I would imagine they're doing something with multi-sig. I don't know if they're working with what is it, BitGo or something like that. I know Harbor and some of the STO issuance platforms are setting that type of stuff up. It's definitely interesting to see this. And there was one company that was running ads on CNBC for, like invest in Bitcoin through your IRA and your 401k and stuff like that. But
yeah, it'd be difficult to insure crypto, but the few companies that managed to pull that off, I think are going to get some serious market dominance as far as custodial, because like even putting money on an exchange is considered custodial. So if I had to choose between something like Backed, which is claiming that they're going to have full insurance, versus an exchange that doesn't, well, you know, if Quadriga was insured, then we wouldn't be having these problems that we're currently having, right?
Yeah.
But then again, the risks for the insurance companies are very, very huge, because we could be talking about multi-billion-dollar losses just by, you know, forgetting a password, right? Like,
Yeah, yeah, and we're even seeing like Fidelity, you know, they're coming out, and so I think a lot of the retail brokers are looking to get in quicker than later, right? And I think kind of the final waterfall or domino effect is going to be an ETF, but even if it's just spot, you know, custodial services, that I think alone will get access to a lot of people. So
absolutely. I think that what's being built right now, I believe, is the precursor towards full mainstream adoption. I
yeah.
think that once those insured custodial solutions are there, the, you know, 10 million plus clients of Fidelity or whatever is like, oh, I heard Bitcoin on the news. Hey, put some Bitcoin in my account. A little phone call or an email. Boom, right? When it's that simple for people, because like people also have to realize, like even in the last little bubble we had in 2017, the level of friction that's involved and obstacles that are involved for new participants to get into the market. It's like this esoteric ritual just to
Mhm.
get your hands on some crypto, right? You
Yep.
know what I mean? Like you have to understand, you know, for a lot of, most people don't even know what two-factor authentication is.
Hmm.
Like the average person doesn't even know what that is, or use that, or is used to using stuff like that. So to suddenly be like, okay, so and I've walked through some friends and family through the crypto process step by step, and they still call me up confused. It's like, okay, so what you have to do is you have to, you know, buy yourself a hardware wallet, and then you got to set it all up. So you walk them through the whole process. Then you got to open up an account here at this exchange, but then you got to submit a picture of your passport, and then you holding up a picture of
Yeah.
eating a sandwich while holding up your passport, and then assume that they're just going to secure that data and take good care of it for you. You
Right.
don't need to do that, and then you got to have 2FA on the account. Make sure you have a really, really strong password, and blah blah, all this
But
shit, right?
don't lose your phone or your YubiKey.
Yeah, yeah. And then it's like, okay, and then if you're lucky, your bank will allow you to send the money to buy the crypto off the exchange
Yep.
and this and that. And then you got to navigate all the landmines and the markets and stuff and blah blah blah. So like for most normal people to get their hands on an investment, they just like call up their broker, or they just log into their, you know, brokerage account or their bank, their investment platform and their bank, and they just like buy. That's it. Or they make a phone call to their financial planner. I want
Yeah.
some of
Yeah.
X,
Most people don't even know how to log into their 401k or even what's in their 401k. It's
Y.
true. It's true. A lot of people at work, I mean, they just don't think about that. Hey, Rock, I just posted a link. Jose was saying that there's more info on the death. This says that wow, it's crazy. I've been to Jaipur. Looks like he was admitted in the hospital, had cardiac arrest, went into septic shock. Jesus. Had another heart attack, which killed him. I don't know. Maybe it's legit.
So the moral of the story is, if you have Crohn's disease, don't go eating street chapatis in India, okay?
Oh, yeah. I actually got sick in Jaipur. Yeah, man. That was, yeah, that's crazy. Wow.
So and it, I mean, it's like the story just seems so ridiculous, because like even the percentage of dying from Crohn's disease is like 0.02% or something stupid small.
Yeah.
Um, but it's so ridiculous that it could also just be true, you know, because life is sometimes just really fluky like that.
Yeah.
So we'll see. I mean, I think the RCMP is investigating this as well right now.
Yeah.
If it was a scam, I'm pretty sure it'll come to light. Although, you know what? Then you have scenarios like Cripsy back in the day where, they got hacked and then they were running fractional reserves for a year.
Mm-hmm.
And then the
Didn't
founder
tell
and
anybody.
CEO, Big Vern, just took off and packed up ship and went to China. And that was the last we heard of him.
Yep.
Like, he didn't even fake his death. He was just like, peace. He
Yep.
just left everyone holding the bag. See ya. Try to
Yep.
find me. And then that was it. He just disappeared, right?
Yep.
So, um,
Wayne asks, how much are they asking for to invest in Kraken?
minimum 100,000 USD.
Yeah, I think they were, and that might go up or down depending on how fast they raise.
Yeah.
Um,
And you have to do the whole like accredited investor stuff as well to be able to invest in that.
yeah.
So
Yeah. So this is my problem. Just kind of a tangent talking about like, venture investing. So
yeah.
like, there's this website sharespost.com, which is basically an OTC exchange, if you will, for private equity. So like you could potentially buy shares in Uber, Coinbase, Airbnb, stuff like that.
Oh, really?
Yeah, the problem right now, and I don't know if can you guys Rock, can you pull that up, or do you have to be logged in to see
Yeah,
that?
I'll pull this up and let's see.
So this is just basically a price chart, if you will, of
No, I
here
have to do
I'll share mine, because this is actually pretty interesting. Um, all right, can you guys see this? Okay, cool. So this is basically a price chart of their valuation. So think of this as like market cap, like kind of comparable to like coin market cap, and then looking at the market cap chart. So you can see like on Coinbase back in 2013, they initially raised $6 million at call it a $25 million valuation. So a buck a share. And then their Series B, they raised 25 million at 150, and then quite a bit later. So this was December 13. This is summer 16. They raised 90 million at half a billion, which at that point it was like, whoa, crazy! I can't believe they wow, that's a massive valuation. But then let's track forward. Then they were worth, call it 1.5 or 2 billion, and then their latest round where they raised 300, they raised at an $8 billion valuation. So my hesitation in the venture capital space, or AKA private companies, my problem right now is, yeah, I could go out and buy some Coinbase, but the valuations are so high that you're basically buying the bags of these early investors. This is why, like, I consider myself like early stage investor. I don't want to be investing in D&E rounds. Like, I'm not a private equity firm. I'm not, I'm early stage. Like, I want to be in the seed rounds or the A and B rounds. And then this is my alpha, right? This is my growth.
Yeah.
Obviously I didn't get in on these rounds. But I've gotten in on other early stage rounds that are kind of seeing similar growth charts. Granted, none of my holdings have hit a $8 billion valuation yet. But a lot of companies kind of look like this. Like, sure, I could go in here and do a trade with, Uber. What's Uber?
It's a Uber knockoff.
Yeah.
Business idea, Chris.
Yeah. So you can see here how Uber went crazy. So their seed round, they raised 1.5 million at a $5 million valuation. You know what's crazy about this? For anybody that knows Gary Vaynerchuk, I think he had a chance to throw in, 25 or 50K which would have been worth several hundred million. And I think like Tim Ferriss got like a quarter point of advisor shares, which is worth a couple hundred million. But this, as a private investor, this is where you want to be investing, anywhere from, I don't know if you guys can see it, but it says seed, and then you do your A round and then your B round. And then this is where things start to go crazy. So they went from, call it a $5 million valuation to a $70 billion valuation. Like, this is why private investing is so awesome if you can get in super early here.
Yeah. And then when they go public, then all those early investors will just dump on the public and be like, oh, what's that? You're not an accredited investor? Buy my bags.
Yep. Exactly. Yeah. So Wayne was asking to look at Magic Leap. So you can see here, seed round, they raise, oh, wow, that was a big raise for a seed round. 50 million, then their A was 100 million valuation, and now they're at 6.5 billion. And and this is why, like, as an early stage investor, like, you have to be patient, because sometimes I think the average for the ones that are successful, the average time to get an exit is 7 years. But that's why, like, it only takes one or two winners to turn, as little as like 25 or 50K into several million. And when I say several, I mean anywhere from 1 million to $500 million. Like, it's, oh, you got in on the seed round, Wayne? Nice, dude. That's awesome.
Nice.
Let's look at like Airbnb. Yeah, look at this.
Plateaus a little bit.
Yep. Yeah, I mean, that's what we're seeing now, right? Is a lot of these companies have stayed private for so long. Like, it used to be, like, back in the 90s and the early 2000s, that, companies would be going public earlier. Now they're holding out, and their growth is happening outside of the public markets. So by the time they IPO or do what all these companies are doing now with direct listings, by the time that happens, there's like no more growth potential. It's like, what are you going to do? Buy these bags that are just like severely overvalued?
Yeah, that's why I still kind of hesitant on stuff like FANG stocks or whatnot, because it seems like not only is it way beyond any seed rounds, but it's also pumped publicly for like a decade.
Yeah.
$1 trillion market cap. Like, how much higher can it go? Is it going to grow into a $10 trillion company? Maybe, but it just seems like there's cheaper deals out there to me.
There is. And, it's, if we do get a recession in the near future, like, I would be very welcoming of that. I mean, where a lot of people are afraid of recessions. I mean, I get it. People lose jobs, and obviously bad things happen when the economy shrinks or has some kind of crisis. And for anybody who is in the workforce or investing during or before 2008, like, you guys know what that looks like and feels like. But there's a whole generation of new investors and workers and entrepreneurs that have never been through a bear market. And I mean, those are really the most exciting times to have opportunity, right? Is when everybody's running for the hills. It's like, but I feel like the dumbest thing to do is to try to buy after, like, Airbnb went from a $2 million valuation to 30 billion, right? Like, am I going to buy those bags? Nope.
Yeah, that's how I feel with crypto a lot of the times. Like, that's why I try to choose projects that are big, but still very much like at early adopter prices.
Yeah.
Versus like ones that have already been through like 4 pump cycles.
Yeah.
And
exactly.
are still up, even in this bear trend, still up like 30,000%.
Yeah. And that's why I say, like, we don't have to be first in. In fact, I mean, sometimes waiting for the second move, but it's that, say there's like 10 bull runs or 10 major increases in value in a project or a stock or a private company or whatever, like maybe be number 2 or 3 and then sell at 7, 8, or 9, right? Like get the meat of that move, which the earlier you are, the longer time horizon you need, right? Like 5 to 7 years. Or in the case of crypto, 5 to 7 minutes.
That's absolutely.
Yeah.
Last little piece of hype this week was Jack, the CEO and founder of Twitter, tweeting about Bitcoin for a few days. And he participated in Lightning Network torch passing. So basically you just, they just pass around a payment. They call it a torch payment, and they just keep adding a little bit of more value to it. And the idea is you try to pass it to someone who you trust, who you think is going to pass it along and not just pocket the money. So he got involved in that and sent someone a Lightning transaction and basically just started tweeting about Bitcoin, how it was his one and only crypto investment and he's bullish on it and all that kind of stuff. And he also seems quite favorable to the idea of maybe even possibly integrating some kind of crypto or Bitcoin features into Twitter eventually.
Yeah, I don't know if that article talks about the Rogan podcast, but he was on there, which got a lot of hate, by the way. I was surprised how much hate he actually got on there.
Like I don't get it, right? Because you have these prominent CEO and founders, they go on Joe Rogan, maybe they smoke a doob or whatnot, like like Elon Musk.
Yeah.
And then people are like dumping Tesla shares. Oh, how irresponsible of him, blah blah blah. How irresponsible of him. It's like this guy popularized electric vehicles while half of these people criticizing are sitting on their butt on the couch eating potato chips, right?
Mm-hmm.
Like, how dare he smoke weed on a podcast? Anyways, like, I don't, people have a lot of opinions about prominent or successful people that build things in their businesses, but, a lot of it's just talk.
Yeah.
So I think it's great. I think it's great that he's promoting Bitcoin. I think anyone who's prominent that promotes Bitcoin at the lows is a hero. Anyone who promotes Bitcoin publicly at a celebrity at the highs is a sell signal, and they're blasphemous heretics. But
Yeah.
Remember when what's her who was it? It was Crypto Claus. It was not Miley Cyrus. What's her face? Katy Perry.
Oh yeah, did her fingernails?
Remember that?
Yeah.
When Bitcoin was at $20,000.
Yeah.
If that's not a sell signal, I don't know what is. Right? But it's like what I mentioned before. Like there's a difference between celebrity endorsement during peak hype and euphoria when everyone's jumping on the bandwagon and it's popular and trendy, versus celebrity endorsement when the prices are low and bearish and sentiment is low. Actually, probably a better time to buy, but that kind of celebrity endorsement can increase user interest at the lows, which obviously can lead to the next shift or next phase.
Yep.
All supply and demand stuff. So that was interesting to see that. And then I found it really funny how, he tweets about Bitcoin and people are like, what about Bcash? Have you looked at Bcash? What about the Bitcoin fees? And then one guy's like, Bitcoin SV, check that out. And suddenly you've got like hordes of people shilling every shitcoin fork known to man. Right?
Yep.
Coming out the armies of shillers. So
hey, real quick, Rock, before we sign off, while I've got shares post open, I just want to show you guys why I like private investing so much.
Sure. You want to share your screen?
Yeah. I'll just this is something that I don't think a lot of people see, like, or truly like understand. and definitely, I mean, it's near impossible to actually have like a reference for this stuff for private investing. So, but what you can do on Shares Post, this is just like kind of a what if portfolio chart. So you can go on here and like create a watch list, and then it'll give you like just kind of like a valuation growth of these companies. And you can see like 2 years ago, so 3 years ago, February 2016, if you had 10K in these companies, which you wouldn't, but this is just, again, like a what if scenario. 10K 3 years ago would be worth a little less than $500,000 today.
That's pretty good.
Yeah. So that's why, like, and there have been several media outlets that have talked about the move away from public markets into private. And so I know some of my best returns have come from private stuff. And I don't know. I think that it's going to stay like this in the future. And so focusing on learning everything you can, both about public markets, meaning the stock market, and private markets. And I know a lot of you guys have come into investing through crypto, which is great. And that's obviously a huge focus. But there are other forms of equity investing that are proven, that have been around for hundreds of years. Both, private investing, right? Investing in private companies and investing in the public markets. Like, they can all be great ways to build wealth. And especially during the slow times in crypto, I would just encourage you guys, like, take this time when it's slow to really add other things to your tool belt, right? Like, I think it's a mistake to say that, oh, crypto is the only thing that you want to invest in. I mean, if you're a Bitcoin or a crypto maximalist, that's fine. But if you're somebody who's like, no, like, I really want to build wealth, I just learn everything you can. And when crypto, for you guys that were with us back since 2013 through the first boom, and then, obviously the 16, 17 timeframe, how busy and crazy things can get when the crypto markets are hot. But when we're in this winter season, instead of just sitting on your thumbs or being distracted with other stuff, like, I think I really, really do believe it's a great return on your time invested to learn about this other stuff. So that's my little rant. I believe so much in that, because I've personally grown wealth in these other markets, and I've seen friends and colleagues and associates that have made like tons of money in these other markets, which is why we're talking about them more today. So that's all I wanted to say. And I just thought that this was a cool visualization of the potential that you have in these private markets. So
absolutely. I'm sure a lot of those skills and knowledge can be transferable too, and interchangeable with other markets. Like, it's like using a part of your brain that looks at those types of fundamentals and such. Mm-hmm. And one could apply that same type of analysis, not maybe exactly the same, because crypto is different, but it'll probably help one in their analysis of other markets as well.
Exactly. And that's what Travis is really good at. Like, obviously his main focus is and has been the public stock market. But what he's really, really good at, I'm talking like Travis is the best in the world that I've ever met at this, is looking at the fundamentals, looking at the story, looking at the market sector, and understanding, like, being able to point out his own blind spots with how he's looking at a potential investment. And actually, like, looking at things very objectively and finding the story. I mean, for those of you that were in the stock class Tuesday, because we had an adjusted schedule this week, but this week, he was talking just about, like, diving into secbam.com and, reading a lot of these reports and, like, finding the story or finding things that don't quite jive or coming up with a thesis and then finding information that disproves his own thesis, right? Like that's what really makes you a great investor. And crypto, I think, is easy on the trading side, but I think going forward, over the next 1 to 10 years, it's going to take a much more disciplined mindset and approach. And if you do it right, guys, I see so much potential on the horizon, but it takes patience. It takes being diligent, and just making the right moves, right? Just knowing when to press the gas and knowing when to slam on the brakes, and not getting frustrated and throwing in the towel because things are slow, right? 2015, the best case example of that, right? Things were slow, but that turned out to be the best time to accumulate. So, I don't know. That's my little soapbox.
Absolutely. Patience literally is one of the most valuable tools in crypto trading or investing.
Yep.
Not only patience of waiting out for the next market cycle, however long that can take, and being patient with that, but also when you're in a new market cycle and you're trend riding and your bags are doing well, to have the patience to actually be able to ride some of them for ridiculous gains and not completely sell out, which is easier said than done.
Yep.
Right? Easier said than done. Or patience to wait for the market to crash and go into a bear trend.
Yep, absolutely. And if you guys want a perfect example of what not to do, then spend all day on crypto Twitter. The the amount of insane idiocracy on there is just mind-blowing.
Yeah, people get bored and impatient, and then they just start attacking each other, really.
It's crazy.
Just turns into a little troll fest. But all right, so it's about an hour and a half.
Yep.
That pretty much.
We got a couple of questions. So David said, can you invest if you're not an accredited investor? Yeah, so there's two ways to invest in private companies. The easiest and the most common is if you are accredited, but if you're not, there are other ways. I mean, there's forms of fundraising like Regulation CF, Reg A+. Like there are several different ways that you can invest in private companies as a non-accredited investor. Just do the research. It's worth figuring out what these structures are. I've done some YouTube videos on it, and we're going to continue to do more classes talking about it. But I just encourage you guys to jump in head first.
There's actually two more things I want to say. One last thing was last week I did talk about wash sales on taxes. There is this crypto tax person. Her name is Crypto Tax Girl. I was speaking with Zach about this because she was giving people information saying that because the IRS never deemed crypto securities or whatever, that technically wash sale rules don't apply, and you could just sell crypto at a loss and then immediately buy back the same crypto. Usually there's wash sale rules where you have to wait about 30 days before you can buy back in. I spoke to Zach about this, and he says that he thinks that information is bogus, that one should always just apply logic, even if there's no specific rulings to the tax laws. One should just apply common sense to them. So he highly discourages anyone from doing that. He says the only exceptions to the rule would be if you're trading in something that's a base currency like Bitcoin. Let's say you're doing a lot of altcoin trades, then naturally there's going to be a lot of buying and selling of Bitcoin back and forth at all price levels. He said intent is really what they look at. So if someone intentionally tries to wash trades to harvest a tax loss, then that might not fly. Whereas if it just happens as a result of general trading, then probably not as much of an issue. But he says that he disagrees and thinks that's irresponsible for her to be spreading that information. So that's one element. So I just want to correct that point. And one question that was asked earlier was about USDT. When I said, we're in a catch-22 of either keep fiat or money on the exchange to trade, or hold your private keys and risk drawdowns, or put money in the bank and risk missing the trade entirely because it takes so long, so much friction from the bank to the exchange and back, and extra fees, of course. And you asked about USDT, basically just holding your own USDT coin or token in your own private wallet. And although this is kind of like a step in the right direction, it still relies on counterparty risk. For example, if Tether went bust, if it turns out that they don't have any reserves, or Bitfinex goes bust or whatnot, then those USDT coins in your wallet would be worthless. And also, those transactions can be censored. They do have control over it. So even though you have your own private keys, there's still a great deal of trust that is dependent on a single point of failure, a single company. So it's an interesting hybrid approach, and one can certainly do a mix of multiple things when one needs to hedge, including shorting. But there's no perfect solution yet for crypto traders out there with counterparty risk. There's not a perfect solution. There's ways to minimize risk by splitting up the money on multiple exchanges and maybe having a comboed approach of some holding some of your private keys, some spread out throughout exchanges, obviously pulling some hard profit out of the markets, maybe even shorting a bit to cover some of the coins in cold storage. So I'd say a combination approach, but risk management is definitely more multi-layered, multi-dimensional than in traditional assets, because in traditional markets, you've got the fundamentals and then you've got the technicals on the charts. And that's enough for most people to worry about, let alone having to deal with counterparty risk. But I guess our equivalent to that in the legacy markets would be like a run on the bank, would be Lehman Brothers type collapse. It does happen from time to time.
Yep. Yeah, that's good info, man. The tax man is going to get his, right?
They win no matter what.
Yep.
Bear market, they win.
They're like exchanges and brokers. They always get their piece.
Yeah, definitely. And yeah, so I think does that cover all the questions, I think?
Guys, what do you think if a world crisis comes, where to hedge money during a crash on markets? Guns and ammo, and fresh water.
Yeah, fresh water. Get a good well source.
Yeah. No,
Land.
Yeah, land. I mean, those are all serious things, but I've been accumulating some precious metals. I treat those just like crypto. If you don't hold your metals, they're not yours. Just like if you don't have your private keys, they're not your coins. So if you are looking to speculate, or AKA invest in gold, and you don't want to hold it, just buy some ETFs. If you're looking for a hedge in case of a shit hits the fan scenario, precious metals, crypto, everybody's so tribal, right? Like we saw the debate between Schiff and who was it? Max Kaiser. Crypto's the best, gold's the best. Like I'm pretty agnostic. Like I have both. I know that gold provides about 3% real returns a year, meaning after inflation. But it can have long periods of bear markets. So I don't really speculate or actively trade gold. I just kind of stack it and then try to keep it in a vault that's not tied to the banking system. Right. So there's like private vaults that you can like hold your stuff in.
Or you could just bury it.
Yeah, or you could just bury it and then hope that you don't go senile or die of Crohn's.
Those debates are so they're hilarious, because it's like watching someone debate as to whether or not a screwdriver is a better tool than a hammer.
Yeah.
It's like, well, use the tool for what you need done, right? Do you need to send millions of dollars to someone relatively anonymously for really cheap across the world?
Yeah.
Then use Bitcoin. Obviously, you're not going to send gold through a bloody courier pigeon, right?
Yeah.
Do you need some kind of hard money that you can bury somewhere in your backyard, or have physical access to, that stood the test of time for 5,000 years? well beyond any of these fictitious paper instruments or digital instruments we're all trading, whether it be legacy markets or crypto, and you want something hard that stood the test of time, buy gold, right? I don't see it as one or the other, but they really love to, people just, you're right, they get all tribal about stuff, and it's like arguing over what your favorite flavor of pizza is or whatever.
It's like people that, you know, I like, I'm one of those weirdos that likes pineapple.
Yeah, I'm a pineapple maximalist.
Some people that would shun me and kick me out of their house if I ever said that.
Yeah. It goes with the Hawaiian shirts.
Yeah. Josh, any good sources to start learning more about private investing? Yeah, you know, we're going to do some classes where I'll teach you all the stuff I know. I mean, there's some good books on Amazon that, you know, just like, you know, do a search for angel investing if you want to learn some of the basics. If you're in a major city or a city with a healthy startup scene, go to any local accelerator or incubators or angel groups or venture capital firms, or, you know, try to have coffee or whatever with any local investors. That honestly, that's the best. Like if you just read one book on kind of the basics of private investing, they'll just teach you like the logistics of it and how it works and what paperwork usually happens. I mean, they're pretty simple things. You cut a check and you usually get or some either through Carta or a mailed certificate. And then the best thing that I did was I joined a couple of local angel investing networks, and I saw hundreds and hundreds of pitches before I ever made my first investment. And what that did is I just kind of sat quietly and listened to a lot of the more experienced investors, some of them which have been doing it since like the 70s or 80s. I heard their questions. I heard how they drilled the entrepreneurs or the management team. I heard like in private conversations, like, okay, here's what we like, here's what we don't like. It's crazy how much you can learn from just going to those pitch meetings if you're in a city that actually has them.
I watched a bunch of episodes of Shark Tank. Does
that? Yeah. If you want the super distilled kind of fake version, you could watch Shark Tank, which is entertaining. And I mean, they do get real companies that come through there, but it doesn't really show you the reality and behind the scenes of actually doing business.
Yeah, it's just little sound bites and stuff.
Yeah, sure thing, Josh. Let's see. I think that was about it. So if you guys have any other questions, let us know. Otherwise, we can go ahead and wrap it up. And
all right, folks, we'll take care. Great seeing everyone. Have a great weekend. And my price prediction for Bitcoin is that next week it'll be at around $3,500.
Unless we get a breakout of the descending wedge.
I'm just going to keep saying that every week very arrogantly so that the market proves me wrong and does something.
Yeah, be like, yep, we guarantee next week it's going to be 3403.76.
Guaranteed.
87, 83, 80, 78.
I've been scalping on the $2 time frame on Bitcoin on the minute charts. That's where all the action's at, you know?
Yeah. David says 20K. I'm with you on that one. All right, guys, have a great weekend. By the way, next week we're going to do a class. We got pushed back a week, but we're going to be doing a class on the Maximize Your Money. So we'll be talking more about, like, you know, for anybody that's interested in the personal finance stuff, you know, 401ks, IRAs, private investing, basically all the little things you can do to maximize your cash flow and savings, and you know, just basically put yourself in a position where your financial foundation is stable and set, and that way you have more risk capital to put in other private investments that eventually earn several $1,000 into $1 million. That's my goal. I'm always looking for those grand slams, and sometimes they're abundant, sometimes you're in a desert market environment, but all it takes is one or two really awesome investments in a lifetime to change your life. So that's why we think the
Absolutely.
foundation is so important. Yeah.
Absolutely. All
All right,
right.
guys. Have a great one. Thanks, Rock.
Take care, folks. Cheers.